Oil hitting $130 over the weekend. We're reaching the danger zone, folks. Coming up here on The Jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 8:09 here in the middle part of the country on Monday. It is March 7th, 2022. Here's your morning jog around the economic headlines of the world. I want to start off over the weekend where crude oil traded up to $130 a barrel, and that's for U.S., not Brent, right? Normally ours trades at about a $4 or $5 discount to the international benchmark. But U.S. crude, as futures opened up on Sunday evening, traded at $130 a barrel. It's now down to about $121 here as of this morning, right? We had some talks that the Iran deal was getting delayed. That delays oil into the market, right? We need those additional barrels to help balance the world supply that is now short because Russia is functionally banned from energy trading, right? Of course, every single sanction the U.S. and Europe has put on Russia has excluded energy. But look at this, right? Shell buys some oil from Russia. They announced an apology letter on Saturday evening for buying that oil. Functionally, Russia oil is blacklisted, right? If you buy a cargo of Russian crude, you're going to have a darn good reason why, or else you're going to face some severe social consequences, right? It's to the point where no one really wants to touch that stuff for fear of reputational damage. And who can you blame them, right? You know, it's a terrible dictator invading a sanctioned nation for no reason, right? With no provocation. So on a go-forward basis, until we see some resolution in this conflict, you need to have higher prices to create demand destruction, right? We're about 100 million barrels a day, give or take, in demand. If our supply is only going to be 97 million barrels because 3 million barrels of Russian crude is non grata, you need to have 3 million barrels less usage. It's a lot less usage. Quite frankly, the folks that are going to use less are the folks that have less. Let's talk about the long-term ramifications. This is kind of really being a death knell for the green movement for the next 10 years or so, right? You need to have a political cycle go through. You're talking about energy security and energy independence really coming back to the forefront in the American political narrative. Who had that on their bingo card for the 2022 election? But here we are. We've seen the consequences of importing lots of your energy on a go-forward basis. I would think that the winds are going to shift back in favor of the oil production companies, at least here in the U.S. It's going to be viewed as a necessary evil to keep these industries running on a go-forward basis. Uber, before we get you off to a nice Monday, a little bit sideways in the news with everything on Russia and Ukraine. Having a nice quarter, posting additional numbers. Here's a number that I thought was really surprising. They're back to 90% of their bookings from pre-pandemic. That seems like an awful lot, and 95% recovered on airport bookings. Are we seeing Uber getting back to sort of nearest their all-time highs in terms of ridership? It looks like it, and that's a good thing, right? We're seeing increased mobility, increased travel. That's increased business in the economy. Fundamentally, with Omicron really being on the back burner now, especially now with Putin invading Ukraine, we could see some underpinnings of a real recovery in travel. Fortunately, if you have a shortage in supply, an increase in travel demand, boy, you could see oil go meaningfully higher in the upcoming weeks and months as travel season starts. You still have Russian supplies short. If you want some additional information throughout the week, feel free to follow me. Find me on the internet. I am out there. Until then, I hope you and your family have a great rest of your Monday and a great week. I am out.